everybody, and welcome to the new edition of LM's weekly wrap, Latin Manalal Securities weekly wrap of all the events that have occurred during the week, encompassing all the global events, the global developments, the repercussions on the market, the domestic developments, the domestic corporate developments, etc. So with me is Mr. Jash, who is a senior investment research analyst at LM Securities, and he will be briefing us on the global developments and the global repercussions of the same, as well as the domestic macro situation, which will be followed by me covering the micro related developments. So I'll hand over to Jash for the macro.
Thank you, sir. I'll take it from here. It's a pleasure coming back in front of you all, and I'm basically going to round up how the market has been in the last week. If you remember last Friday, we had said to be cautious with the market, and Monday, Tuesday, we had seen a sign of nervousness in the market. We had seen the market going down. But after that, it has recovered. So the market has largely been range bound, and I think I'm not going to complain because the investors are not losing a lot of money. But I would, to sum it up, I would say that I would still be very cautious because right now we have the Jackson Hole's meeting, the Fed meeting. So the market is quite nervous with that. And we are going to wait for its commentary, because that is going to show us what the other parameters are going to be. For example, the dollar index has been rising, the metal prices have been going up, and also the crude prices have been going up in fear of the Iran deal. But we're going to leave that aside. But there are a lot of factors that are affecting, and that is why the market is range bound, because they don't know what the commentary is going to be. And so because of that, I would keep my positions really, I have a hawkish view on that, definitely. Also, the biggest problem that I see right now is the China slowdown. China is the biggest producer and the consumer of the world. So if there is a slowdown over there, there's going to be a cascading effect over there. The metal prices, the commodity prices, and all of that is going to move in the particular direction. That sums up my global commentary and the commentary for our markets. I'm going to hand it over to Nirav, sir. Thank you.
Yeah, thanks, Jash. So as rightly pointed out by Jash, we had a kind of a confident start to the week as far as the global developments were concerned. There was a kind of a bullish undertone in the market, because the crude was ruling at around $94 a barrel. The 10-year benchmark bond yield was close to 2.8%, and the dollar index has also come down at the beginning of the week. But during the midweek, we have seen in a dramatic change of events. The markets have become very, very cautious and circumspect ahead of the Jackson Hole Symposium meet, where the comments from Fed are very, very keenly awaited. So we've seen a dramatic change in reversal in the fortunes of the market, where the crude oil prices have again risen from $94 to $104 per barrel. The dollar index has also formed a double top at 109, and we've seen the 10-year benchmark bond yield also come to 3% and higher.
That's right.
So I think this week overall was one of circumspect. Markets were quite circumspect about what's going to happen. There was a feeling of anxiety in the market. In the domestic markets also, we've seen that kind of reaction. We've seen yesterday the market started off on a very, very strong note, but towards the end of the session, the markets literally gave up their gains. That could be in a way attributed also to the fact that there was the FNO expiry.
Yeah, I think the way the market opened today, I think it was definitely FNO expiry.
Yes, and today also, as we come towards the end of the markets, we are seeing that the markets have given up their gains. That air of nervousness is still there in the market, and there were certain sectors which were quite weak in the market. The primary sector being IT sector. I think the IT sector is under tremendous pressure because there is a news flow which is there in the market that the clients across Europe, across US, they are slashing their IT budgets, they are going to cut down on their IT spending, etc. So whatever is a discretionary spending, etc., is definitely going to come down. And we saw in the beginning of the week companies like Infosys and Wipro, they have cut down on the variable pay element.
Correct.
So that we are quite circumspect for the time being on the IT sector stocks. So it's better to adopt a wait and watch approach. Every time we've seen that whenever there's a depreciation of the Indian currency, the IT sector tends to do well, but I think that doesn't apply this time around. So that is one. Coming to the sectors which performed quite well, we had the auto sector, which is giving very positive news flows.
I think even if it's not going down, it is holding its prices.
Holding, yes. In fact, the star performer of this week has been Mahindra and Mahindra.
Yes.
We saw good commentary coming in from Maruti and Tata Motors. Both of them came out with good commentary. We saw some good progress in Eicher Motors also, but today I think some slew of resignations from the top management has resulted in the stock coming under some degree of pressure. Another sector which I like to point out is capital goods space and the infrastructure space. Is very good action happening over there. We're seeing a lot of companies where the execution is picking up. I think the case in point is Larsen and Toubro. It's a big beneficiary of the pickup in the infrastructure spending, and the top rung capital goods companies like ABB, Siemens, Thermex, all these stocks have started moving up. Another thing which I'd like to point out is that a lot of mid-cap contracting firms, etc., they have started winning big orders. So if you take the likes of companies like Power Mech projects or PSP projects or Techno Electric, suddenly all these companies have started winning big orders. They are getting big orders from the larger companies, from clients, etc. So there's definitely traction which is happening. There's action which is.
I think so. Just to add to that, after 2 years, the festive season is going to be at full capacity if we are going to see that.
Yes.
So I think that will also cause a lot of action.
Exactly. I agree with you. Titan has been a big gainer this week, and even jewelry stocks like Kalyan Jewelers or Thangamile Jewelry or the South-based jewelers, they've also started seeing traction. So, even a stock like TBZ, it has also shown a lot of traction.
So we're going to see Ganpati, the Ganesh Chaturthi, then the Navratri and Christmas. So all the big festivals are lined up, and this time there are absolutely no restrictions. If I would just point out, so I think that's going to lead to a lot of extra consumption that has been lacking since the last 2 years.
Yes. But finally, to sum up, I think the word of caution. There are sectors like IT, metals, pharma, where we are seeing a good amount of selling pressure at the top. So one has to be careful. One has to be very cautious. And a word of caution even on the mid cap and the small cap stocks, because we are seeing a good amount of profit taking happening over there at higher levels. The valuations are definitely looking stretched, beginning to look stretched at this point of time. So I think the sectors performing well, the defensive bets like the autos, the FMCGs, they will continue to do well. The capital goods, the infra space will continue to do well. There are sectors like the consumption based stocks, as Jash pointed out, and of course the hotel story, which is looking quite good. So in the hotel space, as we have said, we continue to like stocks like Taj GVK, Indian Hotels, Mahindra Holidays and Resorts, Lemon Tree. So a lot of many concepts to discuss, but I think time paucity is definitely there. So this is about it for this session. We'll be very keen to hear from your side, your comments with respect to our show, and we look forward to catching you next week in another session of Weekly Wrap. Thank you, Jash.
Thank you.
Happy
Happy investing.
Thank you.